In my last video, there was a request to talk about option approval levels, so that's what I'm going to do. Options are a great way to diversify your investments while potentially experiencing greater returns and losses than with traditional stocks or bonds alone. But before you start trading options, it's important to understand the different approval levels so that you can choose the right level for your trading goals and your risk tolerance. The level that carries the least amount of risk, or really that requires the least know-how, is level 1. At this level, traders are able to sell covered calls and cash-secured puts as long as they have enough cash to buy all the shares, as in the case of a cash-secured put, or have enough shares in the case of selling a covered call. So, if a trader wants to sell a put on Nvidia stock with a strike of $160, they must have at least $16,000. That's 100 shares in an options contract times the strike price of 160 in their account that is not tied up in any other trades. Similarly, if a trader wants to sell a covered call on Google for a strike price of $100, then they must have 100 shares of Google stock in their account that has no other sell orders or any other option contracts based upon it. Level 2 allows traders to buy or long calls, puts, straddles, and strangles. Hopefully you understand what a call and a put is, but a quick overview of straddles and strangles might be necessary. A straddle is when a trader buys a call and a put at the same strike price, and they both have the same expiration date. The maximum loss is the total price paid and is achieved at the strike price that is set upon with both the call and the put. A strangle is quite similar to a straddle, except the strike of the call and the put are different. The options still have the same expiration though, and the maximum risk again is the total cost of the trade and will be achieved at or between the two strikes of the strangle. On these great charts, you can see the difference in payoff ratios as well as the amount of that you can possibly lose. If you want a more in-depth explanation of any of these option concepts though, let me know in the comments. Now on to the next level. Level 3 allows for all types of complex strategies, including both calls and puts, and this includes spread combinations and multi-leg strategies such as butterflies and condors. However, it still doesn't permit naked call writing without covering those positions by either buying back the contract itself or purchasing an offsetting position in another security. Margin deposits at this level can be substantial depending on how many legs and what kind of instruments are involved in the trade that you're trying to set up. And while in the last video I highlighted some potential trades that require this level options approval to carry out, most traders should proceed in this level and in level 4 with extreme caution and should seriously consider doing extensive research before they execute these trades on their own. The highest option approval level, level 4, grants access to the most sophisticated trading techniques like covered strangle write-ups, which is when you both sell a call and a put simultaneously, along with engaging in true short selling, which involves borrowing shares from someone else's account, then immediately turning around and selling them into the open market within the same period. Additionally, traders are able to sell uncovered calls and puts. This essentially means that they can sell options contracts on margin, which is incredibly risky and can lead to some crazy multiple 100% losses. As expected, large margin deposit amounts apply here due to high degree of volatility inherent in these types of transactions. In order to obtain one of the 4 levels of approval, you'll need to submit a request to your broker. Upon request, your broker will review your option trading experience and financial status to determine the appropriate options level assignment. But be aware, brokers do reserve the right to reject applications based upon numerous factors deemed relevant for their safety and your safety too. While I don't necessarily recommend using Robinhood, it is a popular trading platform, so I will go over how to request option approval on Robinhood. Once you have opened the app, tap on Account in the upper right hand corner. Then click on Settings. Once in Settings, go to the option trading and click on the Enable button. At the end, you just need to answer a few quick questions about your investing experience, knowledge, and some other minor details. Then you're ready to go. Options are very complicated trading tools that can rapidly make or lose you money. Having the knowledge of option approval levels is the first step in your options trading journey though. So keep in mind that even though you are granted certain privileges, that doesn't mean you should necessarily use them. Instead, be conscious of potential risk with your positions and evaluate whether the reward justifies the risk of getting involved. I hope this was helpful and allowed you to have a better understanding of option approval levels. But if you have any other financial or investment related questions, leave them in the comments below and subscribe for future videos. Until then, happy investing.